Welcome to the deep dive. We're going to unpack the weekly report from May 12th, looking at global trade, central banks, and the economy.
That's right. The goal here is really to help you get a quick handle on the main shifts and how they sort of link together.
Exactly. No getting lost in the weeds.
Hmm.
Just the key takeaways from this market summary. Fast.
Okay, so where should we start? Trade seems like a big one this week.
Yeah, definitely. The UK-US agreement, that's pretty significant. Lower tariffs on UK cars, exemptions for steel and aluminum.
It is, and you have to wonder what that signals, right? Strategically, I mean, for their trade posture going forward, could affect specific industries quite a bit.
Absolutely. And, it's interesting timing with US-China trade reps also planning to meet soon.
Yeah. Could we be seeing maybe a broader easing of trade tensions? Or perhaps just specific adjustments?
It's hard to say for sure, but the market reaction was a bit mixed, wasn't it? The S&P 500 dipped slightly.
It did, yeah. Even with that positive UK-US news. But then you saw gains in many Asian and European markets.
So why the difference, do you think?
Well, trade news is one factor, but maybe other things were weighing on the U.S. market. Future growth worries, perhaps?
Or maybe just investors repositioning.
Could be. And the gains elsewhere might just reflect, different regional economic pictures or specific local factors boosting confidence there.
Okay, let's switch gears to the central banks. We saw rate cuts from the Bank of England and China.
Right, Bank of England down to 4.25%, and China lowered its benchmark rate to 1.4%.
But the US Fed held steady, no change. Why the different strategies here?
It's quite a contrast.
hmm
The UK and China cutting rates that usually suggest they want to give their economies a bit of a nudge, make borrowing cheaper.
Stimulus, basically.
Exactly. Encourage spending, investment. The Fed staying put, though.
Hmm.
That might signal they're maybe more focused on inflation still, or just waiting.
Waiting for more data before making a move.
Possibly. They might feel the U.S. economy doesn't need that extra push right now, or they want to see how things play out first.
Makes sense. Okay, what about commodities? Oil specifically. OPEC plus boosting production.
Yeah, by about 411,000 barrels a day for June. There was a bit of fluctuation initially, but prices seemed to settle.
Around $60 a barrel for crude futures, right?
That's it. It suggests the market kind of absorbed that news. They expected maybe something like this. OPEC Plus is always trying to balance supply without crashing the price.
Right, that delicate balancing act.
And $60 seems to be where the market feels comfortable for now, given that extra supply coming online.
Okay, let's look at the economic indicators now. A bit of a mixed bag here. UK housing market slowed down in April.
But the U.S. services sector showed growth, according to that ISM PMI report.
Which is a good sign for the US, at least that part of the economy.
Definitely. Then you have Germany. Their industrial production rose, apparently ahead of new U.S. tariffs.
Interesting. So maybe businesses were stocking up.
That could be it, trying to get goods in before costs potentially rise. Meanwhile, Japan's real wages still falling.
That's been a persistent issue there, hasn't it?
It really has. And finally, China's exports actually increased overall.
Even though shipments to the US dropped.
Yeah, which is quite revealing. It strongly suggests they're finding other markets for their goods, diversifying.
So where are those exports going instead? That's a big question.
It is. So putting it all together, we see some progress on trade fronts like UK-US,
But then you've got these varied central bank actions cuts here, holding steady there.
and these really diverse economic signals. A slowdown in UK housing, but growth in US services. German industry ramping up pre-tariffs. Japan's wages lagging.
It paints a really complex picture, doesn't it? No single clear trend globally.
Not at all. It's a mosaic. Everything's interconnected. Trade deals, interest rates, production shifts, consumer health, but moving at different speeds in different places.
So for you listening, the takeaway is this intricate global dance. It's worth thinking about how these big international shifts, even if they seem distant, might eventually ripple out and touch things closer to home, maybe your investments or just the price of things you buy.
Definitely. What questions does this snapshot raise for you about where the global economy is headed next? Something to ponder.
Absolutely. Thanks for joining us for this deep dive.